Welcome to Caching Waves. This is an Elliott wave update for Stellar. Now I'm going to be focusing on the smaller time frames here on the hourly and the trade setup I'm currently in. I'll discuss how I'm going to maneuver that. But if you're new to this or just need a refresher, what we're looking for in this pattern is a multi-year triangle series of 3-wave patterns. I updated this near this level here, I believe. But our invalidation of this pattern is this C wave low in blue at 7.02 cents. So if we drop below that level, this triangle is not valid anymore. We can come as close as possible with that E wave, but we can't overlap with it. We did get the reaction we expect as a potential pivot before eventually getting all-time highs. So we're in the ideal area if this is the pivot. So that's what we're tracking. I'm going to go to the smaller time frame and talk about the bottoming structure. All right, so if you remember the previous videos, this could have either been a 5-wave or a 3-wave. It was a very difficult pattern to begin with. But they didn't stop us from seeing it as bullish or bearish. Just wanted to see the reactions. I've been in this one for a little bit, and I'll show you how I'm planning on managing that trade going forward. So first of all, we have our wave 1 and 2, sharp correction. Then we had a diagonal 1 and 2, which came to the 618 extension of the larger wave 1 off wave 2, which is ideally where we get a second 1-2. That's what I like to see. After that, we got the reaction we expected for our third of one lesser degree. Now looking for this 5th wave to complete in the 3rd wave before we get our 4th wave and 5th to complete a 5-wave impulse. Now, if we get this, this is when probabilities really shift that was potentially the bottom when we get a larger 5-wave, because a correction cannot be 5 waves. So we expect at least another move to the upside if we get these 5 waves, right? That's the important thing. If, then we're pretty confident that we at least get another move to the upside after that. So as for targets, we're looking for a 3rd wave in blue at 10.65 cents. That was general standard Elliott wave targets of the first 1-2. We have surpassed that. So I expect the wave 5 to be more equality to wave 1 once we get it. So that will be the target I have. But as for the smaller 1-2 in green, we have just came shy if this was our 3rd and tick through it if this was our 3rd. Not sure which one it is, whether it's right here or right here. Hard to say. The thing is, we can get a deeper wave 4 just because the size of this wave 2 was so small. As you can see, we just broke out, very small. And I can also count a micro 1-2 here. So that could be our 3, this could be our 1-2, and so our 3rd can be right here. Now, important thing to keep this all intact is we need to hold above the 618 of this pole, which is at 9.54 cents. So right now, I would probably label it this way for now, just for now, and see if we can come to our targets of 11.11 or 11.42. That would be ideal for me. And we can also throw up the 1-to-1. So we have our fib poles and our guideline here of the 1-to-1. Which is up there at 11.18-ish. So we'll see. And the only thing as well is if we're going off these poles and we didn't hit the 1.618, you can say we just came up shy. This 5th wave can get extended as well. So right now, just letting it run, watching the waves pan out. But I wouldn't be surprised if the 3rd wave is over here and this just gets pulled out a little bit. And then I can put our 3rd a little bit higher. But we'll have to wait and see. But right now, looking for that. Don't want to see 954 invalidated below here. So that's a good spot for a stop or a hedge. but right now just long only. So my plan moving forward, I'm letting this pan out, but when it looks like I have a topping structure, I'm just going to hedge. I'm not going to close my trade. Again, I want to keep my position size alive that I've picked up all through this area here. And I'll just watch the patterns play out from there if we get that, and try to leverage up more if possible. Again, I only risk 1% per trade, so it's important I manage it a certain way by buying breaks of important levels. I never suggest risking more than 2% if you're really confident in a trade. Not financial advice, I'm just giving you general guidelines here. But generally I risk 1%. If we get a clean 5-wave off this low, I might consider a 2%. Just because probability shift that we at least get another move to the upside as a C wave or a wave 3, right? If we get a 5-wave move. So going to be tracking this one as we go. Ideally, if that is our third, we hold between the 382 and the 50, and if it's bullish, obviously we can even hold at the 236. All right, so we'll see if we get a quick 5 waves here to complete our third of our third. Then we'd look for a 4th wave and a 5th to complete, and then look to add to my position near the end of the month once we get the correction after that. But yeah, it looks good. I'm happy with that. And yeah, all right guys, that's it for this one. Thanks for watching. I'll see you on the next one.